Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Our team is trying to give you wonderful equity analysis of this crazy market. And all I can say is to go from Catherine Kaminski of the Massachusetts Institute of Technology to Amy Wu Silverman of Princeton is what this is about. She's with RBC. This interview, this conversation, hugely anticipated. Amy Wu, I'm going to cut to the chase. Everyone's telling us there's massive options speculation on a daily basis. Is that like portfolio insurance in 1987? Is there a real risk here because of the option roulette that's going on?
You know, you would think so, Tom, but most of the activity we see in options right now is not for insurance. It's to bet on further upside. It's to perpetuate FOMO. It's to beget momentum. And it is not for hedging. It is really historically out of whack with what we would expect from all that empirical data that I looked at Princeton.
This is a special treat. Damian Sassower's wheelhouse. Mr. Sassower, take over the interview and make it smarter.
Well, Amy, I'm going to try and throw you a curveball here because you know I'm an emerging market guy, but an emerging market fixed income guy. So I'm going to look at emerging market equities here. I'm going to look at that big MSCI EM ETF run by BlackRock, and I'm going to look at the Skew, all the call buying, all the bullish call buying that's been going on.
Momentum.
I mean, should we look through that and see that as a signal that perhaps, you know, EM equities are going to go up from here? I mean, how do you look at Skew? How do you look at the options markets on some of these large ETFs?
I think that's a really interesting question. I will tell you, I was actually in the UK a few weeks ago, and I just asked investors that kind of point blank, you know, why is this call Skew bid? It's actually bid in the other ETFs proxies for China, like FXI as well. And what we have heard from investors is, you know, a few years ago, the trade of the moment was China rebound. It did not happen. Folks are a little bit worried that it may never happen, but the right tail is that it could happen.
Yes.
So a lot of this bid is actually a right tail hedge to the idea that we have bottomed. So I will say investors don't think that that is true, but that's certainly they're worried and they're not positioned for it yet. I mean,
I just have to cut you to our audience. You know how valuable that information is. The fact that basically, I mean, the China rebound trade, which, you know, people have poo-pooed now. I mean, it's gone. It's forever gone. It's never going to come back. Just to play for that tail risk, I mean, makes a lot of sense. And to do it with vol at these levels, I mean, Amy, I agree completely. But, you know, we were talking a little bit earlier about which volatility market we should be most focused on. Is it equity vol? Is it rate vol? Is it FX vol? What do you think?
So, of course, I'm going to be a little biased because I'm an equity vol person. But, you know, outside of rates vol, all the vols kind of look similar. It's not like you're getting anything different other than the rates vol universe when you think cross asset. I mean, equity vol, especially on the left tail, is incredibly inexpensive. But there's only so many times a girl can cry wolf, right? You know, people don't want to hear it. They don't want to be positioned for it. They're far more concerned about the reach.
I was smarter in September of 1998 than I was in July of 1998. And it had to do with the dreaded L word, Amy, was Silverman, leverage. And, you know, we didn't know what 15 to 1 or 22 to 1 until Myron Scholes explained it to us. What's the shadow right now in the market? You can't tell me. This is a free lunch. Is it like a blatant leverage, an implied leverage, or is it some other mystery I can't see?
So, Tom, I'll tell you the hottest topic to debate right now in equities is just the idea of if all the short volatility trades that we're seeing from folks selling calls, from harvesting, you know, volatility risk premium, if this some way implodes the way we saw from 2018's Volmageddon. And, this is going to sound a little party pooper, but we don't think so, is the short answer. The kind of leverage in the system and the kind of trades that are going on, especially if you include the delta from the stock, is just dissimilar. It doesn't mean it cannot end. It's just not going to end necessarily in the same way. And I think that most volatility people would say that that is so, just given the nature of these trades.
Volmageddon. I mean, look, for me, Amy, it's these buy right strategies and, these ETFs that are, trying to, get investors to, take advantage of that, of the premium.
Let's explain that to mere mortals listening, okay?
Please.
Because this is a third rail for me. You buy the asset and you write the option against it to bring in a further income.
That's correct.
Until it works. Continue.
Exactly right. And now they have ETFs that are supposed to mimic that type of a strategy. Amy, how convinced are you that that ETF is going to deliver that type of performance at the end of the day?
So it's interesting. In some ways, this is like one of the most bread and butter trades of the derivatives world. It's kind of for a market where you don't see substantial upside. It's another way to get a little yield in a world where, rates don't give you that much yield. What I think is interesting about the success of these products is we actually had a relatively high rate yield environment, especially compared to history. Right. And then we've obviously had a market where certain stocks have absolutely ripped. So it works for some things. It doesn't necessarily work for others. It really depends on your underlier, right? It depends where that delta is coming from. Wow. But look, these are actually very bread and butter trades where if you have the underlying and you get stopped out, it's not really that big a deal.
We're going to go Matthew here right now, folks. Stay with me here. We're going to do the conceit of a global Wall Street audience again with Amy Wu Silverman of RBC Capital Markets. Amy Wu, if I have an implied log normal distribution where I go up on a slope that's not as harsh as the slope that I go down, and if I have all the different leverage, the bets, and the setups within the system, where we are right now, I have parabolic charts. I got a squared function that's incalculable in Nvidia, but particularly in something away from you, in Bitcoin. Do they track a log normal distribution on the way down? If Bitcoin goes down, if Nvidia goes down, in what way do they go down?
So look, Tom, this goes back to what is it, an escalator up and then an elevator down, right? And I do think, this is part of the concern. That's part of the concern with what I mentioned with these short vol trades. The really interesting thing I would say about Bitcoin, because, you can't dabble in volatility without dabbling in crypto a little, is that this has historically been a risk asset correlation that's actually been positive, even though it's been made out not to be. However, we are actually seeing that correlation decline. So if you look 3 years ago, the correlation between just the simple equity market and Bitcoin was fairly positive, and it is still positive, to be clear, but it's actually come in a lot. And so it may actually begin to be behaving in the inflation hedge / equity hedge that it was purported to be in the beginning.
That's a critical statement.
Yeah, no, I mean,
for global Wall Street, what she just said is a huge deal.
And now I'm going to just ask the dumbest question, Amy. I mean, I'm looking at put call open interest on Nvidia. I mean, wow. I mean, talk to us about what your takeaway is from the options market on what is arguably the highest of high-flying stocks in the U.S. equity market.
So I'll tell you, I think there's peak FOMO when derivative strategists sit back and say, wish I had an Nvidia call. That's kind of how I felt after watching this thing. Wow. What's interesting is after the recent sell-off in Nvidia, its first one after a while, those calls didn't move. So meaning people weren't worried about the momentum. They went right back into it. And those call skews are still at historic level, still saying incredibly bullish things. March 18th, there is an AI conference with Nvidia that a lot of folks that we speak to are looking to play.
Amy, may the epsilon be with you. Amy Wu Silverman there, folks. That was just a great call. That will be featured today on our Single Best Idea podcast. All of us checked out of math class when we did least squares. Katy Kaminski kept going. We're thrilled she joins us this morning with AlphaSimplex as well. It's about trend.
Yes.
Is this bull market in equities trending normal? If you look at your work with Andrew Lowe at MIT, back to the great trend followers, I think of Monroe Trout and others, and quite frankly, back to Gauss. Is this a normal market?
Well, I think that's a great question, because if you look at trend signals across asset classes, equities is one of the weaker signals in general from a time series perspective. But right now we're seeing something like we haven't seen since 2017 in terms of the strength of those trends.
When you look at the X-axis, do you have a conviction in your setups, your trades, your belief in how you're going to deploy capital? On the X-axis, are you thinking in minutes, days, weeks? Do you have the courage to make a bet out a month or 6 months?
So we generally look at signals across multiple horizons. And when you look right now at where equities have moved, the turning point was in October. And it's been, I mean, look at S&P. It's up almost 25% since October. So pretty much over any window where you measure the strength of the trend, you're seeing a pretty strong signal that we're going straight to the moon. And so I think that's where, I'm surprised at how incredibly resilient this market has been. If you told me in January that February is going to be as amazing as it was, I would have not believed you. I don't know about you guys, but it's pretty incredible the strength that we see in terms of trend signals at this point in equities.
Katie, I got to ask you about Oh, am I on?
What is this, your
What is
first
going
day?
on? I was on. It wasn't just me.
That's it. I'm done. You're not here tomorrow.
Katie, I got to ask you about foreign exchange volatility here. I'm talking Aussie dollar vol, euro dollar vol, and then sterling vol. I mean, we're talking lows, 2021 lows right now, So, yesterday we had people on here talking, picking up pennies in front of a steamroller. Tom, I know you know what I'm talking about here, but talk to me about shorting vol in an environment like this. I mean, is that the right play, or should, investors be looking for opportunities to get long volatility, especially in lieu of some of the data releases we're seeing over the next few weeks?
So looking at currencies, the weakest signals that we're seeing is in the currency sector. And there's a few exceptions. Obviously, the yen is a completely different story.
Inverted
it's
term
all
structure.
On its own.
Yep.
But if you look at currencies, they really have been consolidating a lot, and there's not been a clear picture because there's this wait and see narrative to see what policy is going to do. So when you look at the technical signals, they've really reined in. There's very little direction, and there's not a lot of P&L in that direction either. So there's just not a lot of movement. So it's not maybe the place to be looking yet, unless you have a really strong view.
Well, Katie, I think
about a big direction.
You make a great point. You're making the point. I think that FX vol is following rate vol, and that rate vol is the center of the universe. Now, I don't know if that's true. I mean, is equity vol the center of the universe? I mean, I've been trained, in my career to think, it's the VIX. It's all about the VIX, and everything emanates from the VIX. But is it rate vol? Is it policy that's going to drive markets over the next few weeks?
So I love this question because we've seen some very different dynamics in market prices since 2022. And the number one most important difference you're seeing is that rate vol and fixed income vol is still elevated, while currency vol has actually been dropping significantly. So you're seeing this dichotomy of there's a lot of volatility in fixed income, and that stock bond correlation is high, so AKA inflation matters.
Right. Good morning on YouTube and out on YouTube. Search Bloomberg Podcast. Peter from Chapel Hill, thank you so much for listening. First time I ever met Peter, he said, moving averages. What a bunch of hot air. I use Kleinman moving averages from the legendary George Kleinman at Merrill Lynch a million years ago. I run them exponential. How do you use moving averages as I look at the financial media misusing them every day?
So what's exciting about trend following systems is their goal is really to measure where market is moving. So using classic tools like moving averages can actually be a very simple way to understand the direction of markets, particularly when markets are moving in directions that people don't like. So that's when trend works the best, is when a simple strategy of making decisions based on
how many moving averages do you use? I use 3 off Kleinman as well. I use 2, 9, and 2, 9, and 30. I think is what. No, 2, 11, and 30.
So we use many, many different types of strategies for trading trend. One of which that you could use is moving average, and we tend to use a wide range. We'll tend to use a wide range of
depending on the
look back windows, Tom. It's all about look back windows.
Yeah, it is. No, and on the Bloomberg terminal, folks, there's a phenomenal look-back test function. Damien, one more question here to the delightful.
I want to talk about the distribution of probabilities around the DSO-IS figure, right? I mean, what I've been told is, okay, fine, the markets are pricing in, 3 cuts and a 80% or 50% probability of a fourth, but the dispersion around what might actually happen, it could be as much as 5 cuts, it could be a hike. Talk to us a little bit about how that factors into your equation and into your models.
So what I think is interesting about being a trend follower is we do what the market is doing, not what the market should do. And if you asked me what the market should do and what we as trend followers are concerned about, it's that inflation doesn't go down as quickly as people like, because there's a lot of hope in financial markets. There's hope that we're going to have cuts. There's wishes, but unfortunately hope isn't a strategy.
And it's going to get solved because Carl Gauss is going to take over as head of the Boston Fed. And then you'll get your, 1 over square root of 2 pi and all that. You'll get your probability distributions.
I wish we had more time with Katy. I want to ask her about commodities. I want to, if you're building a trend following book, is it going to be commodities? Is it going to be, cocoa, beans?
I'm not canceling Steve Roach. Kaminski walks on water, but I'm my good friend Steve Roach. I'm not canceling. Can you come back again?
Sure.
It's a long trek from Boston. What do you think of spring training? They got any chance?
Unfortunately, I've been watching more of the Bruins and the Celtics.
It's
these
good.
days.
Yeah, they
Not trying to be
Celtics are boring.
Okay.
They just
Are you
win.
kidding?
They just win.
Katy Kaminski, thank you so much with AlphaSimplex. This is a great pleasure. As I mentioned this with Ellen Zentner of Morgan Stanley. When they're young and they're desperate, they write these really intelligent economic notes and they have a wheelhouse. Right. You got to have an angle to get read. You know this, Damien. You've lived it. Ellen Zentner owned the consumer. Tom Porcelli owned wage growth.
Yes.
He just owned the study of what our wages, our benefits are doing. With PGIM right now joining us, Thomas Porcelli. Tom, what have you learned about our wage growth? Is it ebbing away?
Well, good to be with you. Good to be, and Damien, love that you're sitting there with Tom. We'll
go there.
We'll have to talk about that as we're playing golf one day. Look, I think that wages I think are going to really take the lead from quits, and the quit rate, it continues to drift lower. That is the reality. It's one of the relationships that works incredibly well. And what we know is that the quit rate is now below where it was pre-COVID. The trend doesn't look very friendly. So I think it's very easy to say that the direction of travel from a wage perspective is lower from here.
Tom, I want to ask you about retail sales and PPI. I want to ask you about the dots next week. But before I do any of that, I need to ask you about 55 Locust Avenue, Tamarack Country Club in Greenwich, Connecticut. The second hole, they pushed the trap back on the left side of the fairway. For you long hitters out there, this is going to be a big problem. Tom, how are you going to approach the second hole at Tamarack this season?
It's going to make it easier for me. I'm not nearly as talented a golfer as you, Damien. So to me, that's a pleasant outcome.
No, but seriously, let's talk about next week. Let's talk about the Fed. Let's talk about the dots. What are your expectations there? Is that going to be a market mover?
Yeah, look, I think Powell just spoke, so I think it's really hard to make the case that he's going to say anything that's sort of very different than what he just said last week. And I think the idea of getting closer, right? Getting closer to cutting, that to me is we agree with that. We've been on that page for quite some time. We've been sort of mid-year cut would be ushered in, and then we'd see a couple more thereafter. So everything that's sort of unfolded thus far has been pretty consistent with our broad view. I think if there's anything that I'm wondering about as it relates to the dots, it's the long run dot. I think that this is probably a very big conversation that's happening within the Fed. I think most people would agree that 2.5% is not the right median for that. It's probably holding a 3 handle. In fact, I would say it's easily holding a 3 handle. I think it's just a question of when does it turn. If you look at the average of the top 5 dots and the average of the bottom 5 dots, they're all turning up.
Right.
The averages are. So it's just a question of time now before the median finally shifts.
What's important is Oak Hill did a great job of extending the course off of the original architecture. You take Tamarack back to 1929. Have they been successful Damien, had taken Tamarack to a new long game that fits Tom Porcelli's game?
Tom Porcelli, Tom Keene made a mistake there. He looked up online. 1929 is no longer the funding year for Tamarack. They just changed that, I believe, right? So I'm not sure what the real year is, but we've gone back in the annals of Greenwich history to really find out the legacy of Tamarack. But no, seriously, Tom makes fun of me all the time when we talk about auctions. We talk about treasury supply. How focused are you on today's 30-year auction? I mean, is there anything there?
No, I mean, look, I think they matter. The auctions matter in the context of people wondering, well, look, we have all these big deficits that have to be paid for. At what point do investors back away? And our view has been, but they're not backing away. And I think each auction, shows that, you can have these tails here and there. But I think, at large, I don't know that if you're the world's reserve currency, I think it's very difficult for people to back off en masse. And I think, each auction sort of drives that point home.
So last question. I mean, where are you just in terms of the number of cuts through the end of this year? I mean, are you along with the Fed? Are you along with consensus? I mean, are we talking 3 cuts and 50% probability of another? I mean, talk to us a little bit about what PGIM's thinking on this.
Yeah, Damien. So we've been pretty consistent on this view that we were going to see 3 cuts in 24. This has been our view since last year, and it remains our view. I think the market really got ahead of itself when it was looking for 6 cuts this year. I had sympathy for 6 cuts, but spread out over some sort of much longer period of time. But I think as it relates to the year, you're looking at 3 cuts. And look, beyond that, I think it's going to be incredibly dependent on how the backdrop evolves. I think everyone is piled into the soft landing camp, which again is where we've been. But there are risks out there, and I think no one should delude themselves into thinking otherwise. So a lot of ground to cover between now and 25. But I certainly think between now and the end of this year, 3 cuts is the right call.
Tom Porcelli, the great missed call has been a buoyant consumer, a better than good GDP. What will retail sales evidence tomorrow? What will we get out of the retail sales report?
Yeah, so the credit card spending data that we look at, I suggest that February was a pretty reasonable month from a spending perspective. So I think you get a bounce back in February relative to that pretty soft January. I think the consumer is on balance in fine shape. I said wage pressures are going to continue slowing, and they will. They're still slowing from a pretty high level. I do worry about sort of the balance sheet. I do worry about how the consumer is engaging in this level of spending. There's a couple of things that come through really loud and clear in that regard. It's basically being driven by credit usage, and it's being driven by cutting even deeper into saving. It's not the excess saving thing anymore. That story's long since gone. But I would argue that the consumer is now cutting into saving muscle. Those 2 things, credit and saving usage, to drive spending, they can only be sustained for so long before you do get into some sort of balance sheet challenges. So I think the year will be fine, and you can bask in the glow of what will be a nice 24. But I think just note how it's being driven, and because I don't know that will have a lot of legs into 25.
Quickly, if the day gig doesn't work out for me, Tamarack is looking for an assistant caddy manager. Can you see me like an assistant caddy manager?
We just got a new pro, Mike Balla. Welcome to the club. We're really excited to have you. And by the way, I mean, for those of you that are looking to get around, and Tom Porcelli, I mean, this man knows how to play. He gets there. I'm sorry, Greg Peters, if you're listening, he doesn't play very well. He doesn't play very often. He works really, really hard. He's in Newark every single day, except on Fridays.
Tom Porcelli, thank you for the golf lesson. Greatly appreciated. A daily look at the front pages around the world. She pulled an all-nighter on the newspapers. Lisa Mateo.
We'll start with the Wall Street Journal. Have you ever really looked at when you book an Uber or Lyft to the airport? Because they're saying there are some hidden fees in there if you do those advanced reservations. So there was a Wall Street Journal reporter went out, booked a $55 early morning ride to the airport in Phoenix. $19 of that was a reservation fee just for booking in advance. They also charge over $7 for that booking fee, another $5 for the airport surcharge, plus the $23 fare, all before the tip. So they're telling people just look a little bit closer, because both apps, they only display that total price when you're booking or reserving a ride.
The basic idea is it's just going up and up and up and
It
up.
is.
I mean,
Well, I mean, I only look at the black SUV. I mean, I don't even.
You go the
I go
triple
right
XL.
to the black SUV.
I mean, for example, to Newark, EWR, you have to use the Uber because their taxi cab process at Newark is insane. I mean, it's just like long lines of incompetence.
And it's crazy. The Uber, they can't say it's just trying to find the Uber driver when it shows up too is a little bit tough for people.
The middle child says in LA, there are Uber drivers that only drive to the airport. It's so lucrative.
Well, try finding an Uber driver in Paris, France when we go out there, Tom. It's going to be very difficult. I've tried to do that before.
There's
multiple different levels.
I take the taxis in Paris and religiously in London as well. Next.
All right. I was going to go to this other story in the New York Times about, the trees, but I got to point out this Hampton story, and I'm going to do this on the fly because I really like this.
Audible.
Yes, Audible. This was a Bloomberg story. Hampton's open houses, they were packed this past weekend. People are lining up to go to these. They're saying the contracts, new listings are climbing, but the inventory is still tight. People are paying, giving all cash offers. It's getting a little bit crazy out there.
This is great. I love this. It's great for my wife. It's great for Corey Sassower Incorporated. I mean, she's a real estate broker up in Westchester. All that low-hanging fruit's going to come up to us. We're going to have a great summer.
What does
Lisa,
she see in Westchester and up north?
It's the same. It's the same. The market's back. I mean, it is gangbusters.
In my opinion, it's a transfer of equity gain over to more tangible assets. I sat with a beverage of my choice, cigar of my choice, on Fifth Avenue yesterday, and I was thunderstruck at all the new automobiles of all different price points.
I mean,
Tom, brand new.
All cash, no contingencies, $2 million down. I mean, who are these animals?
They own Nvidia.
Who are they?
I mean, they own Nvidia.
But it's even in New Jersey. I went to open houses a few weekends ago, and there were you had to wait. Yeah. There was a waiting line. And then you put in an offer, and there's 20 other offers, so it's a little bit crazy.
At these interest rates, imagine if rates come down.
Right.
If the 30-year mortgage pops 4.95%, wow.
Well, it doesn't even matter, Tom. They know rates are coming down.
They know rates are coming down, and they're still doing it.
Give me an upbeat story. Talk about The Rock or something.
No, I wish. So, we're talking about Oppenheimer. The payday for Christopher Nolan, who is, the director, producer, close to $100 million he could take in. This is from Variety, exclusive reporting, saying it's a combination of salary, his back-end compensation, box office escalators, and a bonus, of course, for winning the 2 Oscars. I mean, the movie was made on a budget of $100 million. So he can.
How much did it earn? I heard it earned almost $1 billion.
Almost $1 billion. It's at $958 million.
10x.
Yeah.
Wow, that's nice.
Yeah. So,
Very
I mean,
cool.
for a 3-hour movie, usually
do
that's
they
hard
have
for
the
someone to
courage
sit
to
down.
do adult cinema anymore? Or do you think it follows over into next year and the year? We got to get Lucas Shaw on this, but I can't say enough, folks, about Lucas Shaw's Sunday Note. Sign up. I'll put it out on social. Sign up for Lucas Shaw's Hollywood Media Bloomberg Note. It is truly priceless. Really, really good. You got anything else, or you want to do an audible?
That was a good audible, though.
Yeah.
If you don't like sharing the armrest with you and the person next to you on the flight, budget carriers, they're now starting to offer certain perks too. It's called, from Frontier, it's their upfront pass. You can upgrade for $50. You get an empty middle seat. So that's the thing. You get a little extra leg room, seats right in the front of the plane. You get that benefit to be the first to kind of get that in-flight service.
In Europe, that's called business class.
Right. But these are budget airlines are starting to do it now. So that's the difference. I mean,
so there's 3 seats and the one in the middle is empty?
One in the middle is empty.
So that means that 2 guys are paying $50 each, $100 a seat. I mean, that means that seat's only $100?
Yeah, I'm paying $1,200 to go from Zurich to America.
Science.
To do the same thing. And I'm not, I'm getting
just so long as the doors don't fly off the.
Oh, please.
Well, yeah, there's that. I mean, Boeing is serious. We got to get some airline people on here to talk about the mess. Is that all you have today? I mean,
that is it.
The Audible. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.